I am a technical analyst, and I also read a lot of earnings reports as well. So I have a little bit of on the fundamental side too, but the base here is always a pattern. Let's start off with the NASDAQ. The NASDAQ is my bread and butter. That's where I identify a lot of my trades. I love trading Magnificent Seven names in tech stocks, and it's because these names, they have a lot of great movement in the options market, and they're also highly optionable. So looking at the NASDAQ right now, what we see is that we had a really nice pullback, and from that moment, stocks have been bouncing really well. We're in a nice bullish trend. You can see that overall, buyers are coming in. As a trend follower and as a pattern follower, that's exactly what I love to see. So when I see those nice pullbacks in the market, I like to jump on that trend. Now, something else that I'm looking for right now is not just trend following, but also identifying consolidation that's ready to break out. We call the squeeze. But there's another kind of special squeeze that I love to look for, and this is a pattern that works really well when we're at or near those previous all-time highs, which is exactly where we are in the market right now, and that is going to be the short squeeze. So the short squeeze is a pattern that sets up when you have a stock that has higher than average short float. There's a large number of traders that are betting against this stock. When you have a large number of traders that are betting against the stock, and then for some reason there's a catalyst and that stock breaks out, that's where we end up seeing what we call a short squeeze. It's where the short sellers have to buy to cover to get out quickly, and then also you typically have momentum traders like myself coming in and buying the stock, which pushes it higher and causes it to explode. So I'm looking for a combination of things right here. I'm looking for, number one, the regular squeeze, which is where we have consolidation that's ready to break out. And then on top of that, we have tickers that also have high short float. So when you combine these ideas, especially when you have a market that's near previous all-time highs, this is where you can get some really big movers. Earnings can be one catalyst that can cause a stock to break out. So for example, we had Kohl's report earnings this week, and we had Build-A-Bear Workshop. Now, both of these stocks are retail companies that have a lot of people betting against them. They don't have to have this amazing earnings report. They just have to have something that was better than expected. So both of these companies exploded after earnings, and that caused a little bit of a short squeeze. So what we want to do as traders is we want to look at these patterns, and then we want to identify tickers that could do that in the future so that we can be along for the ride. Watch the full episode of Traders Code by clicking on the link in the description.